Hello everyone, today is November 5th and this is session number 9 of the practicum course. Next sessions in November 12th, 19th and 26th. Announcement, this Thursday we're going to take off on the journey about volume and momentum and how they create structure. It's not the relative strength. Relative strength only confirms what momentum is doing. Momentum confirms only what effort is doing and what effort is winning, and we want to catch that moment. So we want to be before the momentum, institutional momentum kicks in. We want to be in the very, very early stages of opening the position. I think this is the next step for us as a community, right? To find a much earlier point of entry. So we'll work on that. I'm excited that, and John is here today, so I'm excited that John's gonna, intermittently here and there, we're gonna use him, and just kind of produce some kind of scans, probably second, third session. The first one is going to be more theoretical, just the material. But this is going to be really, really like a discussion, in-depth conversation, a research on the momentum, velocity, volume, how that influences the structure and why the structure is being created that way. So kind of like a much deeper understanding. So for this class, this is almost like a mandatory special that you guys have to attend. Because we are going to talk about exactly what we talk here. For today's session, we have a mini presentation by Dmitry on his current positions. I just looked at that and I thought, okay, well, you guys always want to know what your peers are doing. Speaking of which, by the way, this website is driving me crazy, with all of this, things that needs to be done for the new website. So I keep promising people that we're gonna launch, but we're still there. So hopefully in 10 days, 2 weeks, we will. And that will be an opportunity for you to start communicating with each other. That was probably number one request from the community. We want to talk to each other. We want to connect. We want to share our experiences. So in 2020, after the launch, we're going to add to that. We're going to add like more communal tools so that you would guys, just chat and, all of us communicate at the same time. All right. But I thought that Dmitry's logic on some of the positions was very interesting. So let's just go through that. That's number one, as usual, bias game, and that probably produces the most participation from this particular class. I think you guys are taking this more seriously than other people, and I love it because that's how I am. WTC is still, people are getting into the knowledge, so they don't really know how to analyze systematically, using Wyckoff method. But you guys are at the level where a bias game is a deep game. It's kind of like, I see at some of the things that you send me, wow, I don't even go that deep. Not because I can't, just because I don't have time. So it's extremely useful exercise. Please continue doing so, going through this exercise. And I want the numbers. So whenever you send me the next email, and we're close to the end of the semester here, session 9, so not close, like 30% is still ahead. So what we need to do is we need to understand where we are with that game. I want your numbers. I want out of 9 homeworks that I gave you as a bias game, how many of those did you do correctly? So please send those numbers to me in your emails. I would appreciate that. Anatomy of the trade, TTD, trade desk, we're going to quickly look at that. I just want your opinion, as to what the class wants to do there. And we'll use one of the homeworks to analyze it. Q&As throughout, market update will go really quick. There's really nothing there of extraordinary value for us today. But there are some spots there like Bitcoin, gold, something that, had some kind of resolution or at least a hint of that. And then we're going to go into the exercise 7. I hope that we will. That's going to be on the selection. Last time we didn't, so I want to make sure that we do today. All right, as usual, everything is for educational purposes. Stop the recording and read the whole disclaimer. All right, well, with that, let me find Dmitry. Hey, Dmitry, how you doing?
Hey, good, Ramon. How are you?
Yeah, I'm doing well. All right, well, let's look at 2 of your trades that you have done, and please walk us through the logic of the trade, why you're selecting this particular stock over other stocks, and then where are we structurally at the point of entry? What was kind of the conclusion? What was the volume price bias? And
Definitely. So, first of all, really excited for the website, Ramon. That's going to be awesome. Thanks for giving me the opportunity to share my 2 of my trades. I think it's going to be great for everybody. And also, guys, feel free to like comment and let me know like what you would have done differently. Maybe Ramon can talk about a few of those comments too. It really would
sure.
help me. So, for my first one was VIP Shop Holdings. By the way, guys, these 2 trades that I'm going to talk about, I got these ideas from WMD, the Wyckoff market discussion.
Hmm.
Um, I took the scanning class. I do a lot of scanning on my own, but I think that the Wyckoff market discussion is a great place to get ideas, especially if you're relatively new to Wyckoff. So I think I just wanted to mention that it's a very valuable class to be in.
Thank you, Dmitry.
So yeah, so for the reaccumulation that's going on here in VIPS, um, I identified the trading range, right? And I labeled everything. I really liked the shakeout spring phase C here. I thought that that showed a nice institutional presence and demand to get in. I have a common theme, and you'll see with the next one. When we have phase D, I saw a reaction to that last LPS, and I saw that reaction happen on very minimal volume. So I did not see a lot of heavy selling going on there.
Hmm.
I also noticed that there was relative outperformance um, through many of the metrics that I'm looking at, and I also saw that the momentum was rising. And speaking of momentum, I'm very excited for the November special, Ramon.
Let's do it.
So yeah, so I made a place to trade. Sorry if it's small there, but a point of entry at $9.15 on that bar right there. Um, I I just felt like this was a good trade for me to take. I felt confident in my analysis, and I placed the trade. And so far, it worked out really well for me. As you can see that we had a big S bar recently, and we're consolidating right now. So um, one quick thing I like to mention is I tweet when I enter trades,
Great.
and I like to do my analysis with the point and figure and the chart
Hmm.
as a sense of accountability. It's part of my
Great.
process.
Hmm.
So if I enter a trade, it's almost like I have to do the point and figure count and I have to do the analysis on the chart. And I just like it just kind of reinforces the fact of, my trading process. So I just wanted
Hmm.
to mention that. So yeah, so I actually exited the position today, not for not because I think that the position is deteriorating, but I actually wanted to deploy my capital elsewhere. We can take a look at it today. I think it's still in good shape, but I had yeah, the relative outperformance is doing great. I had another position that I wanted to get into, but
I
I
wonder
just
what
saw.
was, just out of curiosity, I wonder what was kind of like the cost and benefit analysis for you of closing the position that is actually on the way, and your targets were somewhere here in the long-term range, between 15 and 18, 19. So that makes a lot of sense. When PNF shows that, that's so awesome. Um, so I wonder what was that dialogue, in your head? Like, should I close the position? Should I not? How did you resolve this?
It is, and I was. It's a great question, Ron. I was going to ask you what about this
Can we
too.
look at the stock that you actually, I mean, like, and let
Yeah,
me just comment really quickly on this because a lot of you guys, um, including myself, are becoming, like more and more accountable in front of the community. And what that does, it improves your analysis. Uh, not always, not always. I see some people tweeting out, and kind of like it just, who kind of like went through our system and education, and then it's just nowhere. Um, um, I mean, obviously here we have a different example. So I really like that sense of accountability. I think we were gonna maybe create a much safer place for us to be wrong and to be okay without that. So forums are going to be the place for us to kind of, have our small circle where we would be okay to be wrong. I just want to be people to relax, and study rather than just like be always, oh my gosh, if I'm gonna post this chart, what do people will think about, my analysis? People will think about your analysis is that you're brave by posting this because majority of them will never do that. And majority of them will always doubt whether I'm right or I'm wrong. Should I post? Should I not? So hopefully, this is something that we will be able to do as a community. Speaking of forums, and I'm giving you a small preview of the website. Still working on a lot of technical stuff. I will ask the community to help us out with some QA, once we launch, once it's live. But let's go to forums really quick and look at these threads. And I was discussing this with Franz because Franz is going to be behind kind of like the forums, checking on the ethics. I want to make sure that our community is respectful. There is no bullying. There is no bullying of any type of the analysis that you post. I will make sure that, our team is very, very vigilant about that. There will be nothing of this sort where somebody comes and just says, oh, this is all wrong. This type of members will go away. So this will be a very safe place for us. But looking at the threads, what do you guys think? Really quickly, just, type in if there is something that, you think that we should add. Obviously, I want us to reside, in this discuss charts, analysis, and trades. I think, Dmitry, I'm going to change this. Discuss charts, trades, and analysis. So something what you're doing right now, I think will be highly appropriate, to post the chart like this, and then just like, guys, what do you think? Yes or no? What are your thoughts? What are your like, um, you know, thoughtful ideas? Not something like, oh yeah, this is great. Let's be thoughtful about what we post as this, community. Crypto and Wyckoff analysis is just because there is a lot of interest in the crypto, so I just want to let them be and kind of like, populate that. John is going to be probably residing here a lot, Wyckoff filtering and scanning, and hopefully John will be just, posting some of the, scans and, some of the results of the scans. I think this is going to be very popular. Some general administrative things. And then for each class, we're going to have a protected thread. This means that we will, nobody else but us in the current class, only in the current class, um, will discuss what we want to discuss. And that's kind of like type of approach that I want to have here. Email me, uh, and let me know what your suggestions are. I really like Eric's comment here. He says, I like it. focused threads, but not too many, gets too diluted. And that's exactly the point that I had for the developers. I said, I don't want all of these threads. I just want maybe like 5, 6, no more than 10. And then to kind of have more discussions in one thread rather than like in like hundreds and dozens. Rick is saying, I want to help forums. Rick, shoot me an email. I would love to have more help on that. And I'm sure that we could find the ways to help in different ways, not necessarily with forums, but if you want to be involved with that, I'll connect you with Franz and, you guys can figure out maybe just like, how we can do this. Maybe also place for alumni of past classes from Sharon. Yeah, absolutely. I mean, as an alumni, you will be able to, comment on any of the threads here, not necessarily in the current class. I kind of want to keep it, very tight to that group, to that particular group. But any other threads, you're welcome to comment. How about a body of knowledge area? For instance, FAQs. How does accumulation, reaccumulation look like from Arvin? Okay, well, the body of knowledge is all here under the Wyckoff method. And we have the same article that, translated into Spanish and Chinese. So here's how it looks. That I'm really pleased with the design. So you have quite a lot of knowledge here. This is in 19 or 20 pages of a PDF file. So check this out. Do many of the Wyckoffan follow trade gold? Okay. Well, and this is exactly the type of questions like, do any of you follow trade gold? And if you post it on somewhere here, discuss the chart, or it's even better if you post your analysis of gold and then, start the conversation that way. So then definitely, but probably, Arvind, if you're thinking gold as a thread, probably not. Again, that comment from Eric about dilution of the material, I think it's very valuable. All right, well, sorry, Dimitri, I'm just kind of like jumping all over.
No
But
problem.
let's come back to the logic of the trades here. So we were talking about the cost and benefit switching the positions. Let's say if, and I always kind of in this position as well. I always feel, even though I have maybe like a dozen positions right now, I always feel like I wish I would have more capital because I always see opportunities. So I always want to kind of like be deployed. So what is another stock, if you don't mind me asking?
Yeah, definitely. So my intention actually was to play this other stock for a quick swing trade and get back into this trade, and we can talk about after if that's a good idea or not. But the other stock was MIK, Michaels, and yesterday night I was doing my
I'm sorry, Nike? Did you say Nike?
ups. Oh well, Nike is another position, but no, I said MIK, Michaels, MIK. So
Okay.
yesterday, yeah, yesterday I
Dimitri, are you there? Dimitri?
analysis and really liked the reversal bar that
Dimitri out there?
hey, hey, sorry, can you hear me?
Yeah, there was some kind of disconnect. I don't know if it's just on my side or on your sides as well, guys. So not sure.
Sorry about that.
I
But
think it might be that might be on my end. Okay, so we kind of like probably lost the last half a minute. So could you please repeat what you said?
sure. Sure, definitely. So, like yesterday night, I was scanning, and I really liked. If you zoom in, maybe to like
Hmm.
August through now on this chart, I really liked the fact that it. Again, another common theme is the low volume signature. Well, first of all, you see a lot of yeah. So that and then you see a lot of volume on the buying, and then that last reaction in right before November started
Hmm.
had a very low volume signature. And then
Hmm.
last night I saw that reversal confirmation candle.
Hmm.
So that, like right away this morning, I decided to hop out of VIPS and into Michael to just ride it up maybe at least to 11 and then hop back into VIPS. Now
Hmm.
it might be a dangerous game I'm playing here, and I definitely am open to feedback, but
Hmm.
um, yeah, I wanted to get some exposure to Michaels, and all my other money is tied up in my next trade that I'll talk about, and also Nike
Hmm.
calls.
Okay.
So
All right. Well, guys, what do you think? I mean, like, what's your thought here? So basically, and it's a very interesting um, exercise, um, kind of like intellectual exercise on what would we do here? Why we, you know, changing the direction for the selection, you know, going from one stock to another. So let's put them together really quick. And there should be some kind of probably, you know, technical reasoning as to why you get from one and into another. I mean, like you obviously you're anticipating a more potential here, but then you are saying that you want to get out at 11.
yeah, I just wanted to get into VIPS. I'm sorry, I wanted to get into Michaels for just a quick swing trade, and then
Mhm.
probably I always have my screen open at work, so I was gonna
Mhm.
just keep an eye on a breakout on VIPS and get back in.
Mhm. Okay. All right. Um, well, let's say Eric is saying juggling the rallies between two stocks with limited capital. You're so good. Okay, well, I'm assuming Eric, this is a compliment. VIPs are you're expecting a backing up action, and MIK you're expecting a sign of strength rally, both concurrently. So if they both time with each other, great. But and something else obviously is coming. Okay, well, I think that we kind of get the sentiment here. Um, what would be my recommendation? Well, I definitely see a lot of great signs here. It feels that this momentum will continue. So I probably would be thinking that not just $11, but if I'm gonna go into this trade, let me kind of like be carried above the moving average, so probably even above 12. I mean, a very short-term trade is probably available here with high probability, and the low probability is that it goes to 11 and then fails and then creates a much larger trading range. Um, I still would prefer probably to stay in this position more and be more exposed. So um, I would probably just say, okay, well, let's get rid maybe like of 1/4 of this position, maybe 1/3, maybe 1/2. Like still leave the money in the position that is doing so great for you and technically does not show yet, you know, elements of the distribution or local reaccumulation. Plus you have some targets that are higher, going to 15 and 17 zone. So this is a really good return here from 11. So you're thinking from 11 to 17, and here you're thinking from maybe like 9.5 to 11. So the potential is slightly
Mhm.
different. So that probably would be the only recommendation is just to keep the money in the winning position if you still have more potential and characteristics are still there. And then if you want to get into a new one, well, you know, take a little bit of money, put it in the new position. So probably that would be uh, my recommendation. What do you think about this, Dimitri?
I think that's a great idea and probably well, definitely probably what I should have done. The one thing that
Mhm.
you mentioned when you were drawing on the VIPS chart, what I was anticipating was a slight pullback to
Right.
the
Mhm.
area of support.
Mhm.
Uh, yeah, kind of like
Right.
right there.
Yeah.
Um,
Mhm.
so I was thinking like, well, I have limited capital and I'm actively watching these charts. Maybe what I
Mhm.
can do is pull a fast one, get out of VIPS really quick,
Right.
ride that wave up in Michaels, and then catch that dip
Mhm.
on VIPS, get back into VIPS.
Right.
And I think, I also work a 9 to 5 job, so
Of course. Yeah.
uh,
It's amazing
that's
that you
a
could actually
good
track all of
option.
that like this. Yeah. With 9 to 5 job. So, okay. Well,
Yeah,
let's see
it's
how
too
that,
much sometimes.
right. Well, let's see how it's going to develop. Right. So, I think that the key that we want to get out of this particular discussion is when you're profitable, when you're in a profitable position and the trend has just established, so you have your sign of strength, major sign of strength, um, you're a little bit early in the trend, right? So this is your C relative to phase A here. So this is the
Hmm.
whole trading range and you're just kind of barely getting out. So I wonder if the major sign of strength actually going to be that target that you had, $15, $17, and then there's going to be a much more meaningful reaction. So kind of thinking out loud here, what would I do here? Probably would still wait um, and try to get out somewhere here into the target zone, into the climactic action. There's a little bit of the supply here, but yeah, run the winners more. And then it's not that this is not going to be a winner, but you already here you established, you're in the position. All right, excellent.
I
So,
appreciate that, Ramon. And I think that you've said this before in the past, especially if somebody has a 9 to 5 job, it's probably better to take the longer term swing trades than to like juggle back and forth all the time. So I appreciate the
but you're
feedback.
young, you have a lot of energy, and you're able to watch while you work, which maybe is not available to other people. So for you individually, I mean, I don't mind, like giving an advice for you, like, yeah, go to another position if you want to. Just think about the money that you already made and potential money that still could be done in VIPs. So that would be the
Hmm.
only thing. Hold on to your winners longer and get rid of your losing positions faster.
Hmm.
Okay. What
Great.
about the second one?
Thank you.
Mhm.
So was Crescent Point Energy. I've been following your work, Ramon, on oil.
Right.
And I got really excited about this one. I love the causality that has been
Mhm.
built since around, late 2018,
Yep.
early 2019.
Mhm.
And another one discovered on Wyckoff Market Discussion. So I'm telling you guys, if you guys don't subscribe already, it's like probably the best place I've found
And
so
and
far
let
to
me
get ideas.
advertise the WMD correctly with this comment from Dmitry. Yes, please sign up. Yes, please take, analysis that we present and make your own judgment, and that's what Dmitry is doing. But I also want to be frank, as always, with you guys and honest because I'm a trader, and I know that if I want to be the best trader that I can be, I have to be brutally honest with myself. So not all WMD calls work, and you know that. So you
Right.
still, even though we are presenting, here is an idea on energy, and we're thinking like out of, let's say, 10 stocks, we are kind of like, this is our watch list for the energy. And then your job is to go deeper into this, analyze deeper, find our mistakes, and, make sure that you're responsible for your last choice. Okay, great.
Yeah, definitely. So again, just like I was saying earlier, I saw a major sign of strength in late September, and I saw the diminishing volume on the pullback after that. So in my head, I thought, selling's going down as the price is going down. So maybe not so much eagerness to sell anymore. I saw that intraday trading range develop, and I got in at some point in that trading range. Now, Crescent Point Energy ended up having earnings, which produced that gap down. And full disclosure, I actually got stopped out of entry number one.
Mm-hmm.
At the same time, after that bar closed, the second to last bar on this chart, I noticed that oil futures were at the bottom of their trading range. And I anticipated, yeah, if you can go to the oil futures chart. But I anticipated that essentially, so when was this? This was
Daily.
daily.
Mm-hmm.
Yeah, so right before that significant S bar, like right in November, yeah, right there. I saw I saw that position in oil futures, and I've noticed that Crescent Point Energy is, obviously very correlated with the price of oil futures. So I decided that I made the decision in my mind that we were for CPG, that was actually an LPS. I saw the high volume signature on that
Mm-hmm.
day right there, and I saw the
Yep.
demand tail.
Yep.
And then the next day, in the intraday time frame, I made a second entry, and I deemed this as an LPS. So right now the chart's not updated, but it actually is doing pretty well. I think it's closer to $4 again, and open to suggestions on this one too.
Mm-hmm. Well, let's definitely give some of our comments to Dmitry. I was in this position as well. I opened a position somewhere here, closed it out on the way down. Did not like how the supply started to increase because we basically have to analog the latest rally to the previous rally that we had of kind of the same magnitude, the same quality. So I wasn't seeing a lot of supply coming in on the first leg down. So that was the reason for the exit. So this became kind of like a very, quick trade for me in this particular stock. But I really like Dmitry's analysis and logic here. Look at how the price actually moves down. I said that I was looking at this. Yes, there's definitely a little bit more supply that's coming in. But at the same time, look at the texture with which the price travels. Spread diminishes, and then the volume starts to diminish as well. So all of that are bullish. Plus, we have two legs to the downside here. We have two legs to the downside here as well, but they are incomparable. And the reaction here is much smaller than in the previous instance. And I would totally concur with Dmitry. This looks like a demand coming in on a spring that is in the structure of the backing up action. And we have this trading range, and it was a gutsy entrance here into this position, re-entry. But at the same time, if we would look a little bit closer and we would just say, well, let's just put our Wyckoff glasses on, so to say. And then it just becomes so evident on this day right here, on the confirmation day, that that was potentially a spring. High volume signature going into phase C, a lower volume signature relative to phase A and B. So that just tells us that there is a local supply that has been observed. The price quickly comes back. And now we could anticipate that it's either going to consolidate here, try to retest the highs, or it's just, going to start moving up. Okay, well, Dmitry, let's definitely see how that's going to unfold. Should we look at Nike?
Yeah, I'd love to. Thanks. I don't have a slide on it, but
Okay.
great.
All right. Well, and again, this is something that we've discussed in the WMP, so I think that maybe this is where it's coming from as well. 2018, no reaction. 2019, especially second leg down, goes into the oversold, but much stronger than the market, on the comparative basis. So shows up here on the relative, and then definitely in momentum. So this was a good point of entry, and then the range. And going into August, again, we're exhibiting that, emergence of the strength right here. This would be a good point of entry. And now I'm thinking, Dmitry, that you're probably looking at this as a potential sign of strength in the backing up action.
Yeah, and just to circle back to that point of the backing up action, Roman, I did the Wyckoff market discussion and the backing up action together. I got this idea from Wyckoff market discussion, but additionally, it came up in my backing up action
Excellent.
scan in the September special.
And that's the best. And that's the best. When you take somebody's idea, and I had a student today that emailed me, and I was asking her, well, how did you do, in 2019? And she said, well, I'm positive, but not extremely, taking on some of the advices and then just kind of like not following on my own analysis. Please make sure that all of the positions that we discuss in any of the classes, that you analyze yourself and you doubt me, doubt me, doubt Bruce, doubt anybody who comes and tell you what to do. Because I do that. I always doubt, what people say about the markets, because I don't necessarily, want to be subjected like this and kind of like take it for what it is from other people. You always have, at the end of the day, you're buying or selling. So you gotta make your own decision and be responsible for that. So with WMD, it's kind of like that, just you still have to filter what we go through, and we go through so many. So there are definitely mistakes. Okay, well, Dmitry, a question here. Rick is saying, don't worry, we will check you and Bruce. Yeah, absolutely. Please do that. Eric is saying, can you comment on volume profile of backing up action? Dmitry, what do you think about that increase in volume?
I definitely it was a little concerning. I see that the supply definitely came in, pushed the price down. But I see that the price action is starting to level out right at the area of previous resistance and new support.
All right.
I definitely would say that this was a gutsy entrance for me. I actually bought some January 2020 options on these. But
what is the strike price?
they were 92.50s.
Okay, so slightly out of money.
Slightly out of the money, yeah. Because I think that it's just my risk tolerance, I guess. But
what is your expectation here for, from now to January, which is going to be January what, 17th, 18th, I think, or 20th, expiration, somewhere there?
I have to check. I forgot.
All right. Because on this stock, obviously,
January.
you could have the weeklies as well. So you could have the any week. So you have about 2.5 months.
17th January, the monthly.
17th of January, yes. So what are you anticipating when you guys are building that type of position, leverage position with options? And the only reason why I can talk about this is because I'm directionally trading options as well. I'm also trading options. I started trading options for hedging purposes, and that's been going really well for me. I'm kind of see the value of the theory now in practice. I will bring this material more and more to you and will push you to think this way. But what is here the expectation based on the technical analysis picture? Are we expecting a quick move into November, December into the end of the year? Is that what we're expecting here, Dmitry?
That's what I am expecting, yeah.
Okay,
I'm
and that
expecting,
move would go obviously above 92.5, but would it overcome, do you think, 96?
I anticipate it overcoming 96. I was going to deploy some trade management once it got to that level. My stop is actually it's I don't think I wrote it down in my log. But my stop is if the price goes below the start of the gap. So I kind of am using, yeah, or the open of that candle.
Right.
So
So you're taking
yeah,
it from here?
yeah.
Because the gap
So
started right here at the close of the previous day, just FYI.
true, yeah. So yeah, I mean, I'm anticipating that this is going to reverse. It might consolidate at the support a little bit, and then
Right.
hopefully
And
hopefully
that's
go
kind
up.
of like what I'm trying for you to see right now. So the question about the volume was very interesting, and I think the question about the volume is very relevant here because we're discussing options position. We're discussing the position that, might go up, but how quickly? Would we still be in the consolidation? What if the structure does this? Let's say maybe like late November,
Mhm.
maybe, something like this, early December. So your premium on the option is going to deteriorate during this time, right? Because, I mean, even though we're going to be, let's say, from time to time above our strike price, it's still probably in this type of the scenario, we're still not going to have like an acceleration of the premium. The reason why, it's important is because we have an still overhead supply that we're trying to observe. Where does it come? This bar right here, for sure. There's a lot of supply that we see here. And the selling that we see predominantly just on these two bars. There is no more selling after that. I mean, if somebody is selling, this is not aggressive selling. If we would just take this, we would see that volume is diminishing and spread is diminishing. And the price goes into the support that acted before as the resistance. Those are the elements of the absorption. Those are the bullish elements. But we still need to work out through this supply. So that would be the only question that I have here. How do we deal with this, right? What's the solution? Or maybe not even a solution because I think selection is good, timing is okay, not maybe like the best, but still okay, and only because of this possible scenario, because we could retest here. Possible solution here, if we're thinking that maybe there's going to be some kind of like structure developing as a backnap action, is to think about longer expiration, right? So maybe think about much expiration. I know that the premium will go up on that. So your size will go down. But what it does, it gives you a little bit more kind of room to operate time-wise. So any type of directional trades where you have less than 3 months in option life left, you gotta be in the move that happens now, right? So you have to go in here and then exit here. You have to go in here and then exit here or here. You have to go in, let's say, somewhere here and then exit somewhere here. You see what I mean? It's just that
Mhm.
that duration of the swing trade, uh, has to happen that way. So there should be like a mini built in before that, like mini causality. And I think that's what exactly we are, building here. I'm very curious how this trade is going to unfold. There's definitely some probability that it will go up from here um, through the resistance. Why? Well, just because of this latest action right here on the spread. All right, great. Dmitry, what else? What other thoughts we have about, all of these positions as a concluding thoughts.
My only thought is, boy, I wish I could do this every week. Thank you, thank you
Sure.
so much, Rahman, and all you guys for giving me the time to go over my positions. And Rahman, I'm really excited for the website and the forums. I think that's going to take the Wyckoff community to the next level. So
I
really
hope
excited
so.
for
I
that.
hope so. Yeah, we're working really hard, guys, and we are so low tech, with our team. So it comes really hard for us, but we'll get it. We'll get it. You know, I just want to make sure that the first version that comes out has the functionalities that we need, and at the same time, has a lot of communal tools that we could use, and then we could build on the website. And actually, I'm going to be talking to community more and more about the website itself. I think, as we're building communal tool, I need your help. So, and that's just basically how it is. Dmitry, thank you so much for the presentation. That was awesome.
All right, thank you, Rahman.
All right. Well, with that, let's come back to our class. All right, let's quickly talk about the bias game. First, a comment from a student in this class. I'm not going to reveal who this is. I don't know whether that was said to me only, or that whether this could be said to the class, with the name. So I thought that maybe like more anonymous way. But this is the sentiment that you should be having right now. And this is the thought, as you go through each homework on the bias game, you have to think this way. What does the student say? I must say that the bias game, the bias game is humbling, and I love that because markets always humble us really quick. And the more I trade, the more I invest, the more I understand this concept. If you're not humble, if you're not listening to what the market is saying to you, either about the analysis of your execution or maybe like your emotional execution or the process itself, you're not learning, you're not improving. So, and therefore, you're going to make more mistakes in the future, and your trading is going to be kind of the same. So you have to stay humble. It absolutely reveals the degree of comprehension or lack thereof of the material. So true. And that's why I want to know how many of them did you get right and how many of them did you get wrong. I think it's a very good barometer of where you are analytically, not execution-wise, not process-wise, not emotional escape-wise, but more, your analysis itself. And I would say if you are on this bias game below 40%, you should still keep paper trading and keep working on your analysis. If you're above 40%, please go ahead and trade. Hopefully my results get more consistent as I keep doing them. They will. But more than being right, what I really strive for is being right for the right reasons. Love it. In a way, when Dmitry was talking about his positions and, this idea of switching from one position to another, as a speculator, oh boy, I do understand this. Sometimes I see so many opportunities, but I have to think through those opportunities also in terms of the cost and benefit analysis. And we were doing this, right? We were comparing two stocks, and we want to be in one or another stock for the right reason. If we feel that the other stock will outperform significantly, then most definitely yes. If we just seen that, oh, there is a trade available here, that doesn't excite me. There are thousands of trades available each day. Probably, not thousands, like, probably more. So how do you choose the one that will go fastest, longest, and is going to have such a P&L influence on your equity? That's the one we are looking for. Enjoying the process and keeping the faith that this will start to gel over time and much more practice. It will. And the reason why I know this is because I've been at this place. Some of you might say like, well, maybe not. Yes, I did. And periodically I come back to that. If I, let's say, don't practice each day, go away from the markets. I mean, like, it's like an exercise. It's a mental exercise that you always go through. Obviously, habits, are very strong right now for me, after almost 20 plus years. But still, from time to time, you forget stuff. Like you go away from your regular patterns. Um, but it will get better. And again, the reason why I know is because I'm going through the same process as you guys, and I see how after hours on hours and years of working on this stuff, you improve. Not necessarily to the point where every call is correct. I don't have every call correct, but I'm trading my correct calls in the correct way that, it's profitable. So this is where we're trying to go. Let's look at the bias game. What was the key here? And we already published this, so maybe I'm just going to jump into the solution really quick. First of all, it was an accumulation. Secondly, please note that the time frame, it was a 4-hour time frame, an intraday trading range that on the daily you will definitely have quite a few days here, right? So from beginning of April to June, to 2 months of data. So what do we have here? Ooh, kind of reminds me of oil a little bit, of the structure of the oil right now, right? So we have that selling climax, and then the first supply that we observe with our eye is going to be somewhere close to the preliminary support before the climactic action. Please note how climax is not necessarily the climax that we would be expecting, with a lot of momentum to the downside, a lot of acceleration. No, this is different. We see that there is some buying on the bars like this, probably like this one right here, and the volume signature actually goes down. So the selling is decelerating, throughout this local picture of this last leg. And then obviously a change of character, really good bars. There is really not a lot of buying that's happening. It's just exhaustion of selling at this point. And then an excitement comes on this gap. So please note the position of the gap that happens. If we were to think about where supply has come in, so let's somewhere in this area right here, then the jump actually happens right in, above that area. So if we're thinking overbought, oversold, it becomes overbought almost instantly with that bar. Right away when it's overbought like this, some supply is going to come and it's going to increase, and that's going to push the price down. As the price goes down, we want to see how it goes down. What are the characteristics with which the price goes down? Well, we see diminishing volume characteristics as the price goes down to the lows, so that's bullish. We see that predominantly selling has been done on 2 bars. Here's the selling into an overbought condition, and here's the selling as a giving up the positions that were established earlier. There is really no more heavy selling after that, and secondary test creates a higher low. So that's great, and the price reacts to the upside, and there is some demand behind it. So we know with this higher low that the downtrend has been stopped, and we had the first test. All right, second jump up. This is very interesting because we have the same type of conditions are somewhat similar. We have a jump, an attempt to jump on the gap. The volume signature is less, so that's very encouraging. This is probably the first time on this chart when you should be thinking, not the first time, this one right here, high or low. The second time when you will be thinking, this is a confirmation of the not just stop in action, stop in the downtrend, but probably this is the beginning of the absorption and possible accumulation. Why do we say this on this bar? Well, a lot of supply has come in, and then some supply has come in here, but there is less of an effort to push the price up, and yet how does the price travel? It has a gap, and then it has throughout the day this consistent move up. Here we're a little bit more limited, and on the intraday level we probably would be thinking that this was kind of like the intraday picture for this bar. Intraday picture for this bar was much more interesting. It gapped up, tried to go down, went up, and closed like this. So a much more bullish day for the analogous bar that we see in the area where supply is present. So this tells us, and this is going to be in November special, that there is some kind of ease of movement, and there is definitely some momentum behind, this two attempts to go up. So there is some buying. Third attempt to go up. And here we are thinking kind of the same way. We have to think, how does this compare to the previous times when there was an attempt to go up? Because after the reaction right here, we're still creating a higher low after the original higher low. So bullish, bullish, possible absorption, initial absorption. Now for the fourth time, we're trying to get over this level, and we want to see how supply comes in and then how the price reacts to that supply. So what do we see? This is a measure of supply and demand, obviously. Is there a supply on this bar? Yes. And it actually increased. Look at these bars, right? So, and yet, what do we do? Do we stop? No, we travel. Do we have some kind of supply tails? No, we don't. So even though supply has increased, we kind of seen that demand here is present as well, and this demand is starting to absorb the the supply. Now, what if we're wrong? I mean, like, what if we are still thinking what kind of bar this is? Is this really an absorption bar, vertical absorption? Or is this something that contains supply and we could expect this type of move to the downside? And that's exactly what we want to see. So I believe that we stopped the bias game somewhere here on this bar, on this red bar. So you have to assess what kind of reaction you have relative to the reactions that you had before every time supply comes in. And you kind of could see that this reaction right here is shallow. It doesn't have that depth on the reactions. The volume diminishes, and that suggests that that supply at this level has been observed, and the price is ready to move in a much freer way. So this one, guys, was for you. I was thinking about WTC students when we were working on this bias game, because this is a little bit more advanced concept, and you had to go through that type of the analysis, to get where we are. Twitter was predominantly bullish, and I think it's because we have this higher highs, higher lows structure. So I think that's what people are going for. I don't think that, there is like a very in-depth consideration of how the volume behaves with the price there. But the price structure was so like evidently bullish with the higher highs, higher lows, so everybody was voting on the accumulation. All right, let's see some of the questions here that we have. Let's address Simon's. With the benefit of the historical chart, I can identify the upsloping structure. If this was in real time, at which point would you be able to confirm and start drawing the upsloping trading range? I think that this is the point where you could definitely start drawing it because you have a higher low and you have a higher high. Those are the two requirements, for the sloping trading range. So you have to have 3 points where you have a higher high and a higher low, and you can connect them like this and then project. Once you have additional points, then you just basically check for the validity of those points and the validity of, of the trend channel itself. You could also entertain an idea that this is an upslope even earlier. So for instance, you could think that because supply has come here, why don't you connect these 2 points? And again, guys, this is something that I would never say in WTC, just because I know I'm going to confuse people. But again, you're here a little bit more advanced, so why would we be drawing it like this? Well, points of supply and points of demand are going to be extremely important points for us to identify as points where resistance and support will reside, where it will occur. And that's exactly what we see here. All of these 4 points are on that line. Even this one right here, this is just a test. And then we definitely see how, again, supply comes around the same line, the same upsloping resistance. All right, from Eric. A sloping range versus a horizontal range does not necessarily change one's assessment of the result on a bar-to-bar comparison. However, and I would agree with that, it could if you're trying to decide if result of a particular effort committed above resistance represented by the sloping trading range versus committed defined by the top of the bar. Okay, so basically the question is here in the upthrust actions. Would it be fair that we could say that there is, let's say, a definitive commitment right here? Probably no. We definitely would still say that it's a temporary commitment, and therefore you still have to go through the analysis of the volume by itself. Having said this, let's look at the possible resistance lines, right? And I'm going to use the closes. So I'm using the highest close here to define what is the actual commitment on that upthrust, on the next upthrust. So we have a commitment up, temporary, going down. We have, after this, an attempt to commit at the close, but we can't really do that. Price gaps up, which shows some strength, and this is actually intraday is an element of strength by itself, so we could even put minus sign of strength here. And then the last bar, just because look at where the close is, right? So these are the 3 spots. Do we commit to the upside here? And let me see, Eric, do you see that? Do we commit to the upside on this close? Yes, and Eric, we're committing above the close. So just a small nuance right there. And the nuance here is more about what is the actual commitment on the close? I mean, like, can we have so much supply and then could we finally commit? So in the first 2 cases, we see that even if we have that temporary commitment goes down, we can't commit above on the close here. This is just an open. But here, we have a distance that we've traveled above the last close as a commitment. It looks like the price after that spends all of the time above that commitment, and that would define the strength. So Eric, I would be thinking both ways. I would be thinking both upsloping resistance and horizontal resistance. And I would be thinking, more deeply in terms of not going to just look at the highs, but I'm going to look also at what is the actual commitment on the close. When are we having that first commitment that commits, and then after that reaction does not go back into the trading range, but actually stops somewhere here. And then I would be looking for the upslope, and with the upslope, I think the major sign of strength. This is where we are gonna see that commitment above. So you have to think about that as well. Because if we're thinking in terms of overcoming the upsloping resistance, let's say just which is based, let's say, on the highs of the bars, then when would be that first time when that would happen in a trading range? Obviously on the major sign of strength and into the backing up action. So this bar is somewhere in the middle of the range, and we have to use slightly different technique. All right, great, good questions. Here is your next bias game. So I want you guys to write it down really quick. What do you think? Accumulation or a distribution? And I kind of want to gauge you a little bit in this game, engage you a little bit more, because before we go into the actual reveal, and you guys know already the Twitter game, so it comes out, solution comes out each Friday. I want to make sure that we have that accountability here right now. Okay, I'll give you a little bit more time. All right. Okay. All right. Okay. 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 3 more seconds. 3, 2, 1. Okay. We have accumulation, 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 and I'm considering accumulation and reaccumulation as well. And then we have accumulation. So 4 accumulations, and then we have 1, 2, 3, 4, 5. And this is from just people who wrote this down. So we are slightly on the distributional side, but we are close to 50-50. Okay, well, that's great. So now we know bias game number 24, we're like 50-50 is slightly on the distributional side. Let's see next week where we are with that. As always, you could check out our Twitter on Friday for the solution. And as always, I'm just expecting, your analysis. So definitely analyze this before you see the solution. All right, market update. And we kind of went through this a little bit with Dmitry. Very dull action in the indices. And that's by design. And the reason why it's by design is because, again, in the latest WMD class, I was talking about how this was the area where supply has been absorbed, then supply has been absorbed a little bit more. We don't have the volume signature, so I'm expecting technical analysts that's screaming, we're going up, but we don't have a confirmation from the volume. We're going up, but we don't have the confirmation by the momentum. We're going up, but something is still not healthy about this rise. So it's time to start hearing those comments when the index is starting to get away, from the structure. Now, in our case, we know when supply is going down, it just suggests that absorption has happened. Now, this has to happen in the structure that is a bullish structure, and we have higher highs, higher lows. We're not seeing a big complete structure here. That's the complete structure. And this was phase C. But if we look at much larger structure, then we would be thinking that as long as absorption has happened and the prices are showing that the result is moving in the bias of the absorbed supply, we're at a good place. We don't have to have demand, pushing the price up. Absorption by itself will allow the price to go up without a significant demand signature. And I kind of, alluded in the WMD that that's kind of the character that we're expecting the price to go. The kind of like a laborious move up, grinding, day by day, this type of action on the very low volume. And then somewhere, let's say, where we have news on China or Brexit, this is where we're going to have acceleration. So there is a trade that is built in here. This is an intraday trade, and I don't know if we can catch this, because if news comes, right? So we could only technically catch the news. We could only see how there is some absorption before the news, momentum starts to kick in, we don't know what's going on, and then suddenly the news comes out. So we want to be before the news when we observe those momentum characteristics. Now, having said this, I think that there is a little bit more increased chance that we could have some kind of reaction here. And I think it would be very natural for us to have a reaction here, because a lot of people would be expecting what? Would be expecting coming out in the upthrust type of action and coming back into the trading range. So there should be some selling at this spot. We see some tails, some indecision bars. There is a possibility that on momentum diminishing volume characteristics, we could have that type of reaction. Simon is asking, is a movement on the upside? I thought we wanted to see synchronicity of effort versus result to confirm the upward bias. Yes to both, Simon. So yeah, so please, note that somewhere. Put a note in your material somewhere. Where do we see the synchronicity? We usually will see the synchronicity through the process where the price goes down, retests, and then goes up. And synchronicity usually is going to occur somewhere in this area when it comes out. Here as well. After that, synchronicity could be compromised, right? Because as we go up, momentum goes down, buying goes down, so there should be some kind of weakness, and that synchronicity is going to be done. And then there's going to be some synchronicity to the downside. Like, for instance, this bar shows that synchronicity to the downside. This bar shows that synchronicity to the downside, so we would be expecting some kind of continuation. This is a synchronicity bar. To the upside, let me just quickly find that. Okay, so here is our synchronicity bar right here. Why? Because the volume is increasing, the price is increasing, breaking out. Before that, all of the demand volume signatures were kind of diminishing. So we don't have that move in the volume and then move in the price. But I think it's very reasonable, because here we're observing a lot of supply. The same will come here. We're first observing the supply, but then note where the bars that are increasing in the volume signature. This was the bar. So this was the opening of the position. I actually, in different accounts, in the institutional accounts, I have some of the just index positions, some diversified index positions like spiders, Qs, and this was the bar where it made sense to come in and then just add on the way up. Okay, so what else is going on here? Let's skip Bitcoin for a second. I think oil is kind of doing exactly what, we wanted to do. I think the key was this reaction just lately. So look at this redistribution and then what happens afterwards. Such an attempt to go down, and yet it creates a higher low. It's on lower volume signature. It has demand tails, and then it recovers so fast. So that was phase C, possible phase C. I'm expecting a continuation into that, 60-62 zone at this point. I was thinking that there should be acceleration. There is really not a lot of supply that is left, at these levels. This rally right here as a minus sign of strength in phase B was very attractive because it basically suggested absorption of supply on the way up. And if we would have a reaction and stop at the higher low, a very quick recovery. So happened that way, at least for now. So that's great. Gold, the idea here was that, this is an overcrowded institutional trade, and we could expect some kind of taking of the profits and then unwinding of the speculative position. So speculators have to go away from this position, and that speculative supply has to be absorbed by huge institutions first before we start moving to the upside. So my call here was to the downside, a very quick move to the downside. Well, guys, one of the things that I work on in my trading is timing. So it seems to me that I'm seeing a lot of changes of behavior prior to the actual timing when the move starts. Okay, so this is just my personal rant here on my trading. So I'm working on this. What am I doing here? I'm thinking, okay, change of behavior. Why am I seeing this change of behavior? Well, because I trained my mind, to see those patterns of change earlier on. And I think that kind of the disconnect that I have right now between, analysis on the bias and analysis on timing. It's not necessarily a bad thing, right? Wouldn't we want to know what's going to happen before it happens? So what would be the adjustment here? And maybe something that you can write down as a comment for me, as a suggestion. As Dimitri, I'm open, always open here, to listen to the suggestions. Eric is saying, wait for the retest. I would agree with that. It's almost like, also in oil, if you would kind of like look through my analysis, the call was here. It was not a bad call, even for this trade or, for the trade that unfolds, but it happened prior and it happened in phase B. So yes, waiting for that last test. In this case, what would be the test for gold? This high and this high. Those are still lower highs. And I thought that, okay, well, here I'm kind of right. And then it went up again. But today, I'm thinking this is what I kind of was waiting for. The way how it reacted was not the greatest, by the way. Can anyone tell me why? This bar is not that bearish. That's what I'm saying. Why is that? Okay, Francis saying high or low, absolutely. I mean, like, if there is so much effort, what the heck? Why are you not going lower? Why are you not, committing below, this support? Eric is saying big effort, big result, but doesn't commit below prior low. Thank you. Yeah, so something very strange. So unless it continues to the downside and breaks these levels, then we could expect it, to accelerate, because this is where speculators are going to give up their positions. So we just have to kind of like see what's going to happen tomorrow and into the end of this week. But the very interesting, development in oil. I'm sorry, in gold. Bitcoin is even more interesting. Well, why? Well, because there's so much talk about this, and oh my God, I wish I would be trading Bitcoin more actively to have a much more comprehensive idea. So our crypto residents, Alessio, is doing this work. In the discussion with him, the key, I thought, was all about just still being in the downtrend. I mean, this is something that we still need to understand, and as a context of what's going on. And what is the context for this? Still in the downtrend. Okay, something like this, maybe the wedge. And if we do this, by the way, look at this. Okay, let me just give you this picture. How about this, guys? What is the environment right now? Where are we? Are we in the trading range? Are we in the downtrend? Are we in the uptrend? I mean, this looks very basic, but that's what it comes to. Within the given environment to us, that is lower highs, lower lows, after a very clearly defined buying climax. We definitely are still either in the downtrend or in the downsloping trading range. If this is a downsloping trading range and you're thinking, okay, well, here's our phase A, B, B, C, and this could be, this test could be as a low, then most likely you want to see a commitment above. And yet, it doesn't go above that level. So every time we try to do that, once here, another one attempt here, and then on the news that Chinese government, want to be in the crypto business, Bitcoin rallies that much. Obviously, some supply. So what do we do here? This was a really good discussion with the WTC course on Monday. We need to see how the test is going to unfold. And there is definitely an idea here that I'm hearing from the community and Wyckoff community as well, that this was really bullish. It looks bullish. I don't see the result being bullish though. Because I know that within the downtrend or within the trading range, would we have some kind of rallies? Yeah, of course. Look at all those rallies. Some of them are very aggressive. I'm trying to, highlight their aggressiveness here. So this is just another rally, let's say within the downtrend. Well, even if we are wrong, and this is the emergence of the uptrend, then how would the price behave? Well, we probably would have this type of test, and then this type of bar would actually start either committing to the upside, or we would have the next bar that commits to the upside, and then we see something like this. Maybe it will still happen. I don't know. I mean, like the news on Bitcoin really surprised me because they're just so unusual. When they come, it's just like big splash, and there's just so much. There's so much volatility in this instrument. But I want you to think in terms of the confirmation. Be bullish, not on the character. Be bullish on the structure. Does the structure confirm the breakout? Not yet. So, and then therefore, we're probably, still in the downtrend. Yesterday's bar, this type of like spike to the downside where there is a big drop to 84, and if you saw this on the intraday, you're kind of gonna see it better. I'll just do this on the hourly. So when we look at the hourly, here's that rejection of the price, and plus also, I don't know if you guys noticed, first rejection was at 10,000, another attempt to go up, rejection again, and this comes on a lot of supply, and then after that, more supply comes in. And it doesn't matter that it recovered because the structure is still damaged. So until we actually have this, we still stay in bearish long-term, not long-term, intermediate term, and we're looking for the short-term structure to change. Then I would be saying like, yes, this looks bullish, once we have that confirmation. But before that, I want to be conservative. This is not the instrument where, I want to be extremely kind of like speculative. Because when we announce the call, I mean, we want to make sure that the call comes out when we know that there is change that has happened, and not necessarily we anticipating the change to happen. What would be a good example of this? Okay, well, maybe something like this, and we actually commented on this at the time in WMD. This is a really good pattern, increasing the volume signature, and then we don't give up our position. We're just consolidating throughout this whole thing, and we still absorbing the supply. If that's not enough, next bar is the confirmation. So if we have a bar like this, then it would confirm that, well, at least we might consider that we are in a sign of strength, structure right now. All right. So here's our market update. Let's go to the next segment. All right. This one is very interesting, but I think, Simon, can we leave this for Thursday? Could we do it on Thursday and not necessarily here? And I'm just going to give you guys, you can stop the recording here and just kind of read this. The question here is what the difference between the price velocity and the price momentum. And in preparation for that class and anticipating that question, I've been researching a lot of that. So let's leave this for Thursday as a discussion. But for you guys, I'm putting these definitions here, and I want you to think about what's the difference between momentum and the velocity of price. And those are two different things. You could have, let's say you could have a deceleration of momentum, and this could happen during the high velocity environment. And we'll talk about this on Thursday.